Why? Why? That is the main question. If you've been a member of the retail trading/investing community over the past couple of years, you know that insane things have been going on. Now, just to name one of the many insane things going on, you might have been paying attention to GME, aka GameStop, that ripped from the bottom left to the top right when you heard of the short squeeze event, the buy button taken away, basically seemingly a lot of nefarious actions playing out in the world of Wall Street that obviously benefits Wall Street and not really the individual trader, who in that particular case, I would vehemently argue was right. So the question is why? Specifically around PFOF. Payment for order flow. This is a practice of brokerage sending your orders not to a lit exchange such as the NASDAQ, the New York Stock Exchange, IEX, just to name three of them, but typically they end up getting routed to one of two places. These market makers, also referred to as retail wholesalers, it's a duopoly. It's just two of them that are really in control. You have Citadel Securities and you have Virtu. Between those two, they make buttloads of money, and I'll be showing you all of that in this individual video when I'm trying to answer the why. And the real question we're even asking this is, why is this a practice when we know that the chairman of the SEC, Gary Gensler himself, has gone on record multiple times stating that this practice, which benefits Wall Street and hurts many other people, is a clear conflict of interest? How is there something playing out in our markets right now that the guy who is the head regulator does not like? We're going to get into it. I'm going to do my best to answer why. The answer is money. I honestly could have summed this whole video up in one word: money, or maybe three words: money, money, money. I really actually want to dive into how much money is at stake for these players. Check this out. Ken Griffin's Citadel raked in $16 billion in 2022, marking the best year for any hedge fund in history. And that's just his hedge fund. Citadel's market maker posts record revenue, hedge fund surges, and the market making arm made $7.5 billion in 2022. And just because it's fun and why not, look how much Ken Griffin himself made from all these colossal gains. Citadel boss Ken Griffin made $4.1 billion last year, the most of any hedge fund manager in history. That is beyond ridiculous. So you can kind of get a better understanding for the gravity of the situation. This is why Citadel, Virtu, and a couple other market makers are strongly fighting against the retail movement to end this payment for order flow practice. We're even seeing some members of Congress join their side. Surprise, surprise, they're probably getting donations from one of these players. It's ridiculous. This isn't any intellectual argument of what's best for the markets. It's really become an argument of a fake argument, I should best say, of, yeah, no, this is good, we're empowering retail, we're allowing everyone to do XYZ. But that's just what they're saying on the superficial level. In reality, it's all about making these numbers bigger and bigger and bigger. As a very quick side note, for those of you who have heard that hedge funds don't commonly repeat successful years, Citadel has been on a tear for multiple years in a row now. And in fact, if we're looking at what's already going on in 2023, check this out. Returns from top hedge funds, including Citadel, Millennium, Point72, are in, and an unlikely winner is at the top of the pile. As of now, Citadel already has the second best year-to-date performance. Citadel is always bucking every statistical trend, and they are doing nothing but printing money, and yet they'll stand there and they'll argue and be like, no, what we're doing is the best for everyone. It's trust me, what we're doing, lining our own pockets, it's good for everyone, and you shouldn't be questioning it. As I alluded to before, it was a psychological wildfire that took hold of the nation, took hold of the world, and a lot of people are still fighting for it, namely we the investors, where they're just trying to look at it in a very basic, matter-of-fact way, saying, hey, what is fair? And the crazy thing is that the SEC agrees with retail. It's just one of those things where we're awkwardly waiting around because they're talking the talk, but not walking the walk. My real reason for bringing this up is I don't want there to be any confusion or delusion surrounding this. For example, Robinhood hits back at SEC, warns of threat to zero commission trading. Regulators' proposals would crimp payment for order flow, a key source of the brokerage's revenue. Once again, they're not arguing what's best for you, me, or the other average retail person out there, the other average Joe. They are simply arguing what's best for their bottom line, and they don't care what is put in peril because of it. So in reality, when you see things like this, SEC proposes new regulation, best execution, brokers must achieve most favorable price for customers, heightened obligations for conflicted retail transactions. Understand that you are on the right side of the fight. Clearly, from every moral perspective, logical perspective, financial perspective, whatever it is, there are clear conflicts of interest. And in all reality, it's been going on for quite a while, but recent events really started with GME, and the craziness in 2021 has gotten so many people to finally pay attention to it. And it's one of these things that as everyone gets their voice together, it's a big microphone effect. And ideally, one of these days, the SEC is going to finally listen. Now, with that being said, I know many of you watching this right now are probably thinking to yourself, hey man, I've heard about the SEC. I hear what they're saying. They're saying the right thing, but we've been waiting around forever. And in all reality, I agree with you. In fact, I fully agree with you. I wish this all happened yesterday. And yeah, I have faith that they're going to do the right thing, but I'm not oblivious to the fact that they might just be saying the right thing for maybe their own political motivations or maybe something else. I have absolutely no clue, but I know the only way to properly get any of this changed is to go through the proper avenues of the comments for all the SEC proposals, paying attention to some of the newest developments, and overall just being properly informed. With all that being said, I would love to get your thoughts in a comment below because I fully admit there's definitely some things that I could be missing and I would love to be more informed. But let me know your thoughts on Ken Griffin, his side of the argument, and the fact that he really seems to be lining his pockets. And I would also love to get your thoughts on what's going on with the SEC, particularly the chairman, Gary Gensler. Do you think he's on our side, or is it all just talking the talk but not going to walk the walk? I appreciate your time. Don't forget to like and sub, and I'll catch you in the next video.